Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin and we are looking at AT&T or the ticker symbol T. Do you know how old of a company you have to just have a ticker symbol of just T? This is one of the OGs in the stock market. But what's super interesting to me today is that it's hard to be on the most active list and to be in a clear downtrend. When I say clear downtrend, I mean this thing is on the 1 day, the 5 day, the 15 day, the 1 month, the 3 month, and the 6 month, all negative on a rolling return, as well as you can see with this blue lettering with the white background. That means that we are 3 standard deviations below our 23-day average. When we look at this chart, we can see exactly what we mean. This thing essentially fell off a cliff today. I do not know what the reason was, but I can tell based on the volume that people were pissed. People were up, they were surprised, they were caught off guards, and this was not something that people were looking for in the market, but this looks like what might be a puking. Now, I'm not really going to believe that this is something where you want to buy a falling knife. I'm going to say that I want to respect the actual returns here in terms of what we see on the 1 day all the way through the 6 month. They are negative. You do not want to be a part of this. On the short term, intermediate term, and longer term, you see that we do have a go short. It does look like we've got to go long in the intermediate term, and that's probably because this type of move is almost overwhelming in the indicators, because you normally do not see something that's going to go this negative, this hard for this long, that's this big. We were up at $20, it looks like, in April, and now we're down at 14. That is a rough go for the shareholders and the employees of AT&T. I hope your employee stock purchase program is turned off. We look at the trend indicator here for AT&T. We're noticing that they're bearish on the short term, bearish on the intermediate term, and bearish on the longer term. That is rough. And you can see here, I don't even point this out very often, but you have a short-term bearishness, which means that like the bearishness that you're getting here is even more than normal, which is got to be concerning if you're in this situation. We look at the rolling sentiment. We can see that we went down below 50. It looks like on the 7th of June. That was a great signal. You probably should have gotten out, but you don't have my indicators. When we look at the 2 day, we went from 42 to 39. Do you realize how hard it is to get into the high 30s when you're talking about a 2 day rolling sentiment of a major large tech company that exists in the United States, tech, communications, whatever, sue me. This is a crazy return profile in terms of what we're actually seeing, because we are essentially going negative in terms of bullish sentiment, and we've got a falling bear. I bet you we got a sell signal. We got a sell signal on the 10th of July at $15.27. We've got a big bear. We've got a small bear. There is nothing you want to buy, and there's no reason why you want to buy it if it's related to AT&T right now. I'm imagining this things are not going well. Margins are probably getting squeezed. People are not wanting to buy the stock. I mean, yuck. When you look at this thing, when you think about the sentiment, again, it's incredibly difficult for it to get to 38%. I mean, this thing will generally peak out around 60 and will generally kind of bottom out around 40%. But to get to 38%, that is true capitulation. That is true puking. I mean, especially when you look here, this is one of the highest volume days that you've seen in the past 9 months. This thing does not break 100 million shares traded. It's only done it 4 times in the past 9 months. And today was one of those days. Yikes. That has got to be a rough one if this is in your IRA or if you were a long-term holder just for the dividends, because right now you've lost a lot of money. If we look right at the volatility, what I will say is that the volatility is essentially reset up recently. It reset essentially on the 7th of July. It's been breaking out ever since, and the correlation was also high with it, so you would have expected that it would have gone with it. When you see a price break away from the derivatives, which I mean the underlying like mechanics of how the price is actually moving, it'd be like rate of change. It's the difference between like speed and acceleration. When you see this kind of move where the volatility is breaking out, the correlation is also high, you would normally expect that you get the price to move with it, but this correlation is so weak. You're talking that the correlation is really at about 27% of that remaining move based on the volatility. Yuck, look at this trade range. I want to take a look just at the weekly trade range, because this move has essentially been, and this is going to go all the way back to 2020, this is watching like a utility blow up. This is incredibly uncomfortable for the people who are part of AT&T right now, because your dividends are going to be going down, your share price is going down. You're losing on both ends. So today was probably a day where somebody just decided, you know what, it's not worth it. I'm just gonna shift. I should buy Apple, because you can see back in April when they had that big drop, they've essentially recreated it. I wonder what Monday is going to be like inside of AT&T, because I imagine they're going to have an all-hands meeting, and they're going to be discussing not just the stock prices, but what are we going to do to cut? Because we need to get our margin back up to make our operating expenses go down so that we look like a better company. Because based on the stock price right now, things do not look great. If we look at the ultra sentiment indicator, we can tell very quickly we're going down, and there's no real reason you'd expect to be down here, because when you're thinking about where this line is, it's probably at 46%. To go below that and then to continue to push down, that's tough. But you would say that maybe there's an opportunity coming up where you're going to get a rebound, even if it's just mean reversion. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And do yourself a favor, subscribe to the New High newsletter. It comes out Sundays at 9 just for you. I'll talk to you soon.